Hello and good day. Daily analysis of the EUR-USD currency pair on February 23rd. After an aggressive move downward and the start of a bearish phase, the price entered the fair value zone. A gap formed, and after that, with the
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
Start of Monday and the opening of Asian markets, there was a bullish displacement move. It is expected that the bullish trend will continue and enter the bullish order block zone, which is one of the factors behind the price movement and the weakening of the dollar against the euro. Essentially, after about 5 to 6 months of market uncertainty, the U.S. Supreme Court declared the measures announced by Mr. Donald Trump illegal with a vote of 6 judges. They voted that these measures were illegal, an event that directly put selling pressure on the dollar, which led to its decline. At the start of Asian trading, the U.S. dollar weakened against most major currencies, including NZD, AUD, CAD, JPY, GBP, the euro, and even gold. This movement happened under conditions where the market was experiencing low liquidity. Additionally, considering the temporary closure and lack of activity in the Japanese and Chinese markets, overall liquidity in the global market decreased significantly. Despite the U.S. Supreme Court's recent ruling, just a few hours later, Trump made an unexpected announcement to raise global tariffs from 10% to 15%. This sudden and impactful decision caused the general market atmosphere to shift dramatically toward a risk-off sentiment, consequently exerting a significantly higher level of downward pressure on the dollar across international financial markets as uncertainty began to increase. On the 1-hour chart of the EUR-USD pair in the market, we can see the price movement, which made an aggressive move upward but did not have enough strength for a bullish correction. It lacked the momentum for a sustained rally and is once again moving upward. If buying pressure in the market increases, if the dollar strengthens, the price could move upward to collect the buy-side liquidity. However, by analyzing the DXY index, we can see that after a bullish move, the index has entered a bearish phase, and it is expected that within a certain range, the price could move toward the order block at the 97.232 level, or if selling pressure increases, it could continue down to the 96.672 range. Bearish. It could continue its downward trend. With the weakening of the dollar, it could also increase. Additionally, one of the factors influencing the euro's movement could be its correlation with the GBP, as we can see. With the weakening of the GBP, the euro has also moved along with it, and they have a high correlation with each other in the market. So if the GBP weakens, this particular situation has the potential to significantly impact the euro, subsequently leading to a scenario where the market value of the euro begins to experience a notable downward trend in direct correlation with these events. Also, by checking the multi-RSI indicator on TradingFinder, we can see that the price movement has entered the overbought zone. If this indicator enters the high potential zone, it means there is still an upward trend in the market. However, if a negative divergence is detected or it crosses out of the overbought zone and starts moving downward, it indicates the end of the bullish correction and the continuation of the downward trend in the market. This is based on the 15-minute timeframe analysis of EUR/USD. We can see the price movement, which had an aggressive bullish move at the start of the Asian session, then experienced a short-term bearish correction in this section, and is now once again moving upward. We can anticipate a price retracement toward the order block area at the identified level of the previous bearish trend. We should take advantage of this opportunity to enter a position. Also, at the level where selling pressure increases, the price could move downward. It could collect liquidity toward the lower levels. In this section as well, there is an order block area, and by observing the reaction to this zone and identifying a break of structure or a change of character, you can enter a buy position in the market. By analyzing the price movement at the level where momentum increases in the market, it can collect buy-side liquidity and move into the next order block area. Wishing you success and profits.